You said this Fed is contributing to market volatility. What is it that Chairman Powell did on Wednesday that you disagree with?
So I said it contributed to undue market volatility, is the undue part, excessive market volatility. Look, I think once again, the Fed did not understand the technicals. Once again, the Fed didn't understand the behavioral aspects of markets. So while Chair Powell went out of his way to be balanced, he did a few things that made the market hear just what it wanted to hear. First, confirm that we are downshifting in December. Second, do this ahead of the labor report, suggesting that maybe he knew something that others did not know. Third, talk about risks being now balanced, two-sided, and bring in his colleagues on the Fed. And then what he didn't mention, John, he did not push back in any way against what already was a significant rally in markets and a significant loosening of financial conditions. So while he said other things, and he was right to say other things, including warning about inflation staying, warning about our job not being done, he didn't realize where the technicals of this marketplace were, and he didn't realize the behavioral aspects. And that's why you got this overreaction, and now we're giving some of it back.
So, Mohamed, the equity market is basically back to where it was at the end of August when we heard from Chairman Powell at Jackson Hole. You talked about that easing of financial conditions off the back of the speech, the address from Chairman Powell earlier this week. Mohamed, do you think that means they have to go even further than we expect? And based on where you think the terminal rate's going to be, when they deliver projections on December 14th, how much higher up do you think that dot in 2023 needs to go?
So, John, it's going to be tricky. They've got a CPI report just before. It's going to be very, very tricky. I suspect that they will guide us to above 5. That's where I think they're going to be going. But this is really tricky. This is a situation where the Fed has to be very careful about what it communicates, because we don't need undue volatility. And when we come to talk about other segments of the market where there are already liquidity strains, we'll understand why you don't want undue volatility in this marketplace.
June projection for year-end 2023 was 380. September projection for year-end 2023 was 460. When we get the projection, Rick, for year-end 23 in December, is that a 5 handle? How much higher does that need to go?
In terms of the terminal rate?
In terms of the terminal rate, Fed funds 23 year-end in their summary of economic projections.
Listen, I agree with Mohamed chronicled it. I think they've got to get to about 5-ish. And by the way, I would comment on one part, because last month on the show, maybe I was a bit animated about this because I think it's right. The chair, when he said at the press conference of the FOMC meeting, when he described this dynamic of we can over-tighten and then use our tools to bring it back, and I think I got a little animated. I think that's really hard to do. Unless you break a lot of structures, it's hard to do that. I thought one of the big changes at the Brookings was when he said, actually, we don't want to really do that. That's what some of that volatility was really, because you cut the tail off. And that was a really big deal, i.e. that you could go further and bring it back. That was a big deal for markets. Listen, I would go back to my point. I think they've got to get the funds rate to a level and then let it marinate through the system for a period of time. Put it on hold for a while. It is restrictive where you're gonna pause, and the interest rate tool is one of the most extraordinarily blunt tools today, because it gets at some parts of the economy, not others, and you need to see how it's gonna react. But listen, I think the market's got a little overzealous across a series of things, and I still think they got to go to around 5-ish. But again, I don't think they need to go much further than that until you see the data subsequent to it.